This is Rod Kusin Spooman for Risk on February the 11th, 2019, all times on the Charter Central Standard Time. This morning, as we looked at the TPO, it became pretty evident that this market was going to initially short. And although it's not possible to show you the TPO now historically, as the overnight market moved up briskly here at 2:30 and 3 o'clock, it left an area of repair on the volume chart here, and then once again below the low value area. And so since we failed at 7:30 to hit a new high, that's pretty evident that this is going to short, and it's going to short down to those levels. Now, what we weren't really sure about is whether we would get very far into this, because this was Friday, and as the market moved up late in the day and moved through this particular price range, it left us with an area of low volume in there, which could yet this morning's be tested. But the premium went long in here, and we'll show you that in just a moment. So we let the strategy go ahead and take those longs, which at this moment now is beginning to fail. All the same, let's take a look at what the premium itself was doing and where we wanted to take a short. So very shortly after the opening bell, you could see how the premium, which starts off in here, comes back up into a lower high here compared to here. New high on the ES. So right in here, as this market moved up, is where we would want to start going short, right in there. See how the slope of the premium is dropping in here. Okay. High here, well, actually, high here, lower high, higher high, higher high, lower highs. Okay. So right in there, yeah, we want to begin to look for a short signal. Now, we're expecting this market is going to drop at least to around 2706 and maybe a little lower than that. So we don't want to do anything in as far as going long until we start getting down toward that price level. And of course, we want to be divergent on the premium. So we got some nice new lows on the premium for the day right in here as this market began to drop. But we really want to be looking at the price of the ES compared to the price of the premium when we start dropping into that price range. Here's our first pivot. Okay, now we're still way high on the ES, but we're now going to use this as a basis for comparison. And the premium at this point has a low of negative 1.09. We're just using the moving average. It's so easy to use this. So now we come into this low. And where are we now? Well, we're at 2708, not quite as low as we still need to be. And where's the premium? You can see we're actually much higher. So it wouldn't be surprising for this market to pivot up, at least for a little while, just because of that on the premium. And as it does, all right, some interesting things begin to happen. We start getting new highs on the premium as we move through this price range. And in particular, we draw your attention to this bar on the premium. At 2713.50, we get a new high. So what that should be telling you is that if you're going to short this move, you need to be divergent on the premium at or above 1350. You don't want to short this bar. It's going to come right back at you. So that doesn't really happen here because we're at 1325. It's got to be at 1350 or better. So as you finally move up into 1350 or better, and it goes all the way to 14, look at what the premium is doing now. Aha! Okay, now the premium is divergent. You're not getting any new highs for the day on the premium. You've got lower highs, and we're sloping down. That's where you want to short this. Not here, and not there. Now, all the same, the fact of the matter is, in the real world, while the premium is telling you, yeah, we're going to go and test this, you don't know for sure whether it's going to test it right away or whether it's going to test it after it drops all the way to where you expect it to. You just don't know that. You don't know when that's going to get tested. All you know is that it will. So if you get a signal there, there's nothing wrong with taking it. And then watch carefully to see if the market is going to come back and test that high. Now, as it turns out, it did. But you still had an opportunity to make a little bit off of that trade. But now you're really going to make it over here because that's just exactly what we expected this to do. And incidentally, one other thing. Let me just back up here for a second. This new high on the premium, that was a naked, pretty sure it was a naked bar. Well, no, not quite. All right. That was just a move up. It wasn't a naked bar. Pardon me. All right. So anyway, there's a good place to short it right into 920. All right. We'll come back. We'll show you the automated strategy signals right in there. Now we come down, we hit this low here. This is right in the range where we expected, yeah, this market might begin to turn long. So we look at where the premium is, and we're divergent. So it made some sense, if the strategy is going long in here, to go ahead and give that a shot. Because indeed, we don't have a new low on the premium. In fact, it is divergent. And so if we got long signals in here, they're probably worthwhile taking. But even so, as we moved up to this spot and we look at the premium right in here, it's kind of a relatively new high compared to that low. We let this go a little higher, and a little higher, and then, okay, the premium is divergent again. We've got lower highs on the premium. We're not getting new highs. This is going to come down. And of course, that's what it does. But as it does, right, as this happens, we get another new high on the premium here. Right before, or right after that, it begins to drop. And that's great because now it gives us a very clear picture as to what we want to do next. And we want to go long on any new low here or any signal that we get as we move down to this price range right there in the 2703.75, 2704. Yeah, that makes sense because of what the premium did right up here. So if we get a long signal in there, yeah, makes sense to take that. Now we haven't moved up all the way yet, but we will. Okay, we will. Now there's only one little catch here. As we move down to this low, look at where the premium was. On the average, okay, on the average, we came down to negative 107. Negative 107. Where were we at this pivot? Negative 107. And we were divergent there, that's great. But over here, negative 107. Here, negative 107. Not exactly divergent, is it? Yeah. So it's possible that we're not quite low enough yet to really move this market back up. So this is inconclusive. If we get some long signals in here, yeah, probably should take it. But at the same time, got to be careful. This thing could turn around because it may not make it back there before it turns, goes lower, and then resumes the move up. We just don't know just yet. But there is one other clue, and that's the time. This is shortly after 10 o'clock, 10:10. Now we're into 10:30. We're at a lower high. Excuse me. We're at a higher low in here, and usually right around 10:30, any major move of the market, first major move of the market of the day is over. So I'm feeling greater confidence that this will continue to move up because of the time. But then there's one other little problem. Let's go over to the IB. Here is the IB. Now, the initial balance here and here generates a projection down to this level, which is down around 2701. We didn't make it down there. And what does the market typically do on a Monday? On Mondays, over the last 3 months, the market hit the projected first standard deviation mark only 75% of the time. Over the last 6 months, less than 67% of the time. So the fact that we failed to hit a projection based on the initial balance is not surprising, because Mondays are pretty close to one of the worst days to expect that to occur. Tuesdays are even worse. And over the last 3 months, the only day that really is good is Friday. Today is Monday. So this doesn't surprise us. Okay. And if you knew that, then you're not so concerned about this going all the way down. Furthermore, you've got divergence on the premium. Well, somewhat divergent on the premium. Kind of remains to be seen. All right, so let's now take a look at some of the automated trades for the initial short. All right, so at the opening bell right in here, we get our first strategy, short signal. Don't be fooled by certain arrows. Certain arrows that we've designed here are to be used as indicators, not strategy signals. This is the premium. These circles are all the premium. And this way we can keep our focus on what the premium is doing without having to switch our focus to a different chart. So we've got the premium is telling us that we're short in here, and we've got some signals right in here, a battery of short signals. Yeah, we want to be short in here. A little move up here, it's not important. What's important is not the slope of the premium, but by looking at both the highs and the lows of the premium, depending on what direction we want to trade in, we want to see divergence on the premium. The price is much more important than the slope. So, yeah, we got our short signals as we expected. As we come down, the faster premium is beginning to turn up. That doesn't matter. We get another short signal in here. So if we're not already short, we want to get that. I want to get into this short trade here, and we get another short trade here. Now, as we move into that initial low, which is right in here, all right, and we had, this is that period where we're getting new highs on the premium, particularly here, okay, as we got that short signal and a new high on the premium at that point, there's nothing wrong with going ahead and taking the short there because you don't know if it's going to come back right away. And this thing could have, for all you know, continued to move down to the low of the morning. You don't know that. All you know is it's going to get tested. So you got to watch the premium. If you took the signal and you started looking at what the premium was doing, premium is moving up and the price of that premium is now divergent as it's moving up. Okay, all right, now you got a pretty good idea. Yeah, this is going to come back. So where's it going to come back to? It's going to come back and test that price. So you don't want to short it no matter what the strategy is telling you until you come and test that high, which is what you do over here. That's right here, okay? And right after that, you got a signal. And that one you need to take. Not this one, not that one, because that price has got to be tested. So there we have it. That's the signal. Got a bunch of short signals in there, and we want to take that. So now as we come back down and we begin to see that the low of the premium, or pardon me, the low of the ES has finally tested this area down here at around 2704, and we see the premium is moving up. And all this is doing, these are not strategy trades, these are just telling you what's the premium doing. Yeah, now that makes sense. Now we want to think about going long. We didn't turn the strategy to just give us long signals until after that move here. So as you can see, we got a little block of long signals here. That wasn't faking us out. We just the primary indicator, which I'll show you in a minute, was beginning to slope up, but we weren't really ready to take those long trades in here. But over here, yeah. And over here, again, we need to look at the premium. But all the same, you could see that the premium was turning as we moved in here. Market began to come up. And now we just want to look at the premium again to see whether these trades should have been executed. So we'll go back and look at the premium from 1024 on and see where we're at. So here's our low on the premium, right as we hit that low. And now we want to watch for new highs on the premium. As this is moving up, we want to see, are we getting new highs? Premium is now sloping down, and it's important that you know how to read this. Just because the premium is sloping down does not mean that the ES is necessarily shorting. We need to go through a cycle. So let's look at our faster moving average here. In fact, I'm going to just turn this slower moving average off. We've got this set to 20 and 80. And we'll just change these numbers so you can see. All right, so there's our initial move up. What we want to do is to see where the ES is and where the premium is the next time it cycles up. And you can see we're at a lower high. But, you know, we've gotten some previous indications that this price in here is going to get tested. So we're not too concerned about that. But as you come up to this next high, which corresponds with this, let's move it over. You can see as we moved through this price range, the premium is dropping in here. Premium is dropping. We're not getting higher highs, we're getting lower highs. So that's a pretty good indication this is going to drop. Not necessarily drop to the point where, you know, we want to be concerned about a long trade if we took a long trade in here. But as we come down here, we now are going to look at this low on the ES and on the premium. We're sloping up here. We could go long there. And here, premium is sloping up again. And then we get a little move down right in here. Pardon me. Right in there. And that's fine. These are other opportunities to go long if we're not already there. So any of the long trades in here that were being pulled were being confirmed by the premium. Nothing really to worry about, right? Now we should mention that bar right here. Okay, here's this low, here's the low on the premium. What do you see? Okay, if you're not long already, that bar, okay, that is a naked bar there. So every reason to anticipate that that low will be tested, which it is right over here. And learn that by taking our course. Now you've broken below this level here, so now all you have to do is look at what the premium is doing. You're at a higher low. Now it's safe to go long. And right in here, you got your trade. So that's safe. And where's this going? It's going back up. That's for sure. All right. So that's what we see happening this morning, and the automated strategy signals have got a variety of different conditions that we've programmed into it. It's all designed to be used in a discretionary fashion while you read the premium. We're going to take all of the micro management out of the picture. We're going to automate that and then allow the trade signals to be taken based upon what is really happening with the premium. And you as a trader need to know how to read it to know whether or not the signal that is being generated makes sense. That's it for today. I'm Rod Kusin, Spooman for Risk.